All right, so let's chit chat a little bit what's going on here and get everybody caught up. So what do you got here? AMD is down what? What is that? How much is it down right now, AMD? 5%? Let's see what that looks like. Because it had a nice move here, right? So it's back to, oh, that's not even down much. You think they buy that tomorrow? You think buyers show up? I mean, there was flow throughout this rally in AMD since the squeeze, HC post Fed. You think? Yeah, I mean, listen. All right, let's start with that. That's kind of the issue we've had with flow. There's been some nice order flow out there. The problem is you have earnings like AMD caught, every day it seemed like caught some decent action. But every time around earnings season, you're going to see action on either side. So it's difficult to trust. Now, as we get through this week, and it's usually the first, the 2 big weeks, you guys know, the 2 big weeks where everybody and their mother's reporting, where you see the bulk of that earnings related positioning. And then you start to see the flow clear up. You know what I mean? Again, you still have a good amount of names that report in the software sectors and stuff like that. The difference is, though, it's almost like you got to assume everything is an earnings bet in that 2-week time frame where you got all these big names reporting. Because even if that name that catches some flow doesn't report inside the 2 weeks, it could be a play on like an Apple reporting. Or you see what they do with like AMD and Intel, right? A lot of times you'll see Intel puts instead of AMD calls because they're cheaper IV wise. So you see a lot of that going on. But once you get through these 2 weeks, it gets better and better. And listen, the word better, don't necessarily take that as a good thing, because what can happen is we'll start to see the true colors out of the order flow, and they'll just be, there won't be much buying there that catches our eye. That can very easily happen, especially after a move like this. So anyway, the flow, we've seen some nice looking sweeper activity. Most of them obviously surrounded earnings. So it's going to be very interesting to see what a lot of this flow looks like post earnings as the action cleans up. All right. And this is a perfect example, right? You got like an AMD who caught a lot of flow into this rally, right? Again, tough to trust, but everything is squeezing. So it's kind of for momentum purposes only. And now you get a little profit taking off earnings. And let's see if and when they come in and buy this thing, right? And we all know when AMD catches buying, it's not just one bet, right? A lot of times you can take up the whole entire session of AMD buying. So we'll see how eager they are and how interested they are in picking up some of the weakness here, and we're going to see their true colors. But for those who haven't been around, I know it's vacation time. For anybody who's not a degenerate, usually a good time to take a vacation around this period of time. Just to get everybody caught up, we had basically what happened in this market as a whole. We had a big squeeze off sentiment, right? Sentiment's been so washed out. Positioning has been so washed out. We talked about it for several weeks, how there was just no exposure to equity on the professional side, systematic funds, all that stuff. They even started to take the plunge on the short side, which they usually get run over and caught over a short period of time. And then, you had a little catalyst. Again, what the actual catalyst was is a whole other argument. But in my eyes, the catalyst was the forces at play that were holding down prior rallies. Remember, we talked about and I know members, we talk about this all the time, but I'm talking about everybody else on here. Well, we continuously talked about how the Fed tightening financial conditions, in simple English, rigging the game, basically was capping any sort of follow through on any potential squeeze we saw in the past. Okay. And that was the difficult part about, trying to get a aggressive or even worse swing trading in a sense, off sentiment and positioning being so lopsided because these squeezes couldn't find any follow through momentum, right? And when you have the Fed tightening financial conditions, which basically is, risk weighing on risk assets, interest rates rising, credit spreads widening out, the whole enchilada, it's just not ideal, right? On the risk, exactly. The Fed was selling calls, right? That was the perfect way to explain it. Mysteriously, right? And like we were talking about in the room, everybody, their mind started to go to conspiracy theories. But the biggest difference in this bear market rally was we didn't see the Fed sell calls. Okay. We didn't see those financial conditions tighten every time there was some risk appetite out there, especially in equities. Okay. And for me, like, that's the only takeaway here from what's gone on and what's been different these past couple of weeks. Okay. Again, each and every one of these things, right? There have been two rallies, and they were the only two bear market rallies officially that we could say were bear market rally. Oh, let me get the other chart on this. There's too much going on here. Throughout this bear market, right? So watch this. We had this. Oh, that's a 5 minute. We had this one here. Okay. You guys all remember that one. That one felt even more vicious than this one because it was so quick. It was just in a straight line. Boom, 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 boom. Right. From niner to niner. Basically 9 straight days, 10 straight days of up. Okay. During this period, same thing. We didn't see the Fed aggressively tightening financial conditions into this rally. They started to do right here. Okay, we spoke about that, right here. And each and every other, rally setup that we've seen from there had seen financial conditions tighten aggressively. This one, each and every one into, like HC saying, Fed selling calls into every rally. For whatever reason, and people have some legitimate reasons. I wouldn't call them conspiracy theories, but a lot of people think the Fed, looked the devil in the eyes here and saw how aggressively financial conditions were tightening, and how there was deterioration in the economy, credit spreads widening, and everything else, that they had to take a break, right? So again, we don't know these things for certain. We have, right? There's no, because you're not going to have Powell come out and say that, even if it is true. But supposedly, the tightening was so aggressive that they needed to pause without coming out and saying they would pause, right? Because then that would just lift animal spirits and get everybody bullish again. Even though that's the takeaway from the Fed meeting this go around without them even saying it, right? So people sniffed that out anyway without Powell even using those words. But the Fed has been MIA here as far as the way we label it, rigging the game, right? The Fed hasn't rigged the game since these lows, right? And how can we make that assessment, right? Well, if you look at financial conditions, there are several measures from Goldman, right, to Bloomberg. They've loosened, right? So they were aggressively tightening. They loosened in a pretty strong way for a short period of time, right? I think we've been watching like hawks, credit default swaps, right? And just credit spreads in general, okay? Again, not to get too simple on anybody who might be new here, but No coincidence, the start of January, as these things have been widening out, the market has been going in the complete opposite direction. Almost a mirror image, right? Almost a mirror image if you inverse either of them, okay? And what happens, any rally that we've had, you guys remember, again, I'm not talking to members, I know you guys remember, but guys who come here just on a Tuesday, anytime we get a little pause, right, a little relief in not just credit spreads, but in financial conditions in general, right, from tightening, anytime we get a little relief, it set up a rally, right? The more relief we got, the stronger the rally was, okay? You could see the difference this go around, right, as far as the relief is concerned. So you have credit spreads, credit default swaps, credit spreads, they stop widening out, okay? And that opened the door for a rally here, okay? And like I've been telling you guys, when we get into a normal market, okay, this you could take and flush down the toilet bowl. It's completely useless. There's no reason to even look at it. Honest to God, no reason to even look at it, okay? It becomes a non-factor in normal market conditions. And when we're in this type of environment, it's the most important thing, right? I like I told you guys in the steam room, I get asked the question constantly, you know, how much more do you think this rally has as far as upside is concerned? You know, and God's honest truth, tell me, you know, what financial conditions or spreads are going to do, right? If I have that information, I can tell you exactly where, you know what I mean, how much more we have. But how the hell am I going to make any prediction when I think everything that matters to the rally having any additional upside comes down to this stuff? Probably from what we've seen today, probably almost literally unchanged, flattish, maybe tightened a little bit, if that, GD, nothing major, nothing major. All right, so now listen, the thing is we don't need to see this just fall apart, okay, for the uptrend to continue, okay? It usually doesn't work in a mirror image, especially when it's a bullish trend. As long as this stays in check, okay, the takeaway is the Fed rigging the game, that aspect that's been holding a lot of us back from doing what we normally do when we see sentiment lopsided, right? When we get bull signals, when we see sweeps, right? We have to throw all that out the window because the Fed's been ringing the game as far as overnight positioning. Right? It's not worth it. It wasn't worth it for us, okay? As long as this remains in check, as long as financial conditions aren't aggressively tightening, all that stuff we can use again. That's the biggest difference, okay? That's the biggest difference. We don't need this to completely roll over for an uptrend, or even like we've been calling it, a bullish phase to continue, okay? So the way we want to look at it, the way I'm looking at it is, as long as this doesn't continue this trend, right? We want to assume that kind of range bound, hold the lows, bullish bias into the current environment, okay? Where we look for opportunities off dips, okay? Especially intraday. Like today was a perfect example, okay? Today was a perfect example, just to get an idea of what I mean by all this, okay? No matter what, okay, from this point here, it's going to be really difficult, okay? It's not impossible, but it's going to be really difficult to find material upside without some sort of breather, digestion, or something involved here, okay? We have to assume that, but just based off the magnitude of the rally, how strong it was, how far, how fast, the whole 9 yards, right? Okay, so we don't necessarily want to come in here and start new positions, right? That's, we don't, those of you who've been around know we don't want to play the game that way. We talk about that all the time. So in the meantime, we still want to stick to what we were doing before any of this changed, okay? And what I mean by that is with the magnitude of lopsided positioning out there, and we're going to talk about that in a second, okay? In other words, the reason this move, the catalyst for this move, okay, is based on players, professional players on the other side of the fence, right? They're still there, okay? They're still there. In other words, even off this rally here, okay, not a lot of that short money, or not yet anyway, we'll see how it develops, really covered much. Okay, they covered some, but they're still off sides a bit. Okay, so what that tells us is, even though we're a little stretch on the short-term basis, right? You saw what happened today, where you get, come on. Where's today now? This is, oh, this is today, right? Okay. Where's the morning? Oh, okay, so you get these flushes, right? And then you get these sell-offs, and then you get these big squeezes, right? So even though we need some digestion overall in the market, and just again, from being just overboard on a short-term basis, right? Being stretched. Intraday, even though these squeezes may not hold by the end of the day, we should see plenty of these. And the reason why is, anytime they're selling, right? Let's say tomorrow we walk into some China headline. There's a good possibility of it, right? If there's weakness, all these players offside are likely going to take off some of that short positioning into the weakness. They're going to cover, okay, because they got caught. You understand? Unless it's something, unless you get a Lehman event, right? Then they're not too, right? They're not in a rush to cover any shorts, because now they're in the money. But because they got caught and run over here on the short side, what you're likely going to see is any little dip, any little fade that these shorts can cover into weakness, they're going to do so, okay? And that's why we're going to see a lot of these intraday squeezes, especially off weakness. So you can see these red to green squeezes. Now, if you remember, you guys know, right? Especially like HC, we've been talking about that since the lows. Okay, that was our play without swing trading, right? From this point, based off positioning, right? That's what we talked about. That's the best risk reward trade out there, right? That was our play. The playbook called play for those red to green squeezes intraday. You don't need to hold overnight because you're taking more risk, and because the Fed's rigging the game, it may not be worth it. Okay, so that was our playbook to begin with anyway, was working well. And I think here we still use it, even with the rally, right? Even with the move that we just saw, we still can apply that same playbook, because the intraday squeezes should be plentiful. Okay, and you guys will see when we look at the positioning why that should be the reason. Where that wouldn't work, right? Where that goes out the window, or anything we're discussing here today, when do you admit you're wrong? In other words, when does a force come into play that overpowers it? When this thing, when we see the Fed either getting back involved, or something breaks in the financial system and is causing that to happen. Make sense? Right? So as long as this remains in check, okay, doesn't have to roll over, just has to sit around and do nothing. Okay, if it continues to weaken, it will likely add to the bullish momentum out there. Okay, but as long as it does nothing, I think we can look for squeezes to return purple in the face. All right, until that positioning levels out. And that's what, in my opinion, that's what I think is at play here now. Okay. I have no idea, right? But there are a good amount of people who think that this is just a bear market rally. To me, obvious, it looks the same, right? Like a bear market rally. I don't see anything to be bullish about out there. Not one damn thing. Okay. But you guys know, like, I don't trust my judgment for shit, right? Because I know as much as anybody else out there. We're all looking at the same shit. Okay. So I want to get rid of that bias and keep my eyes open just in case that changes. But it looks like a bear market rally. Okay. It looks like the Fed is not stepping away, right? It looks like the Fed needs to rig the game more. Okay. But maybe there's something behind the scenes that we don't know about. All right. So we have to acknowledge that and have an open mind about it. Okay. But even if this is a bear market rally and we're all right that it is, the likelihood is they're going to wear out that lopsided positioning before this market rolls over. Okay. And because of the way positioning has been lined up, it may not even result in new lows. It could just, like we've been talking for a long time, right? We've been saying that it's definitely a possibility where we can just be range bound. And it feels like when we're trading at the lower end of the range, that the markets and the economy's crashing. And then when we're squeezing, it feels like we hit a bear market low and we're going to new highs. But in reality, we could just be trading at the bottom of that hockey stick. All right. So what we're looking for here, right? Well, we got a couple things we're eyeing, but usually they resolve when this gets washed out. Okay. So here's hedge fund exposure. Okay. You can see they covered a little bit, right? They covered a little bit, right? They've been reluctant to get net short. They've stayed at that zero line. What kind of line is that? At that zero line for a long time, right? This is the last time that big bear market squeeze where they dipped their beak just a tiny bit net short as a whole and they got run over. Okay. Here, they paid them a little bit and they added to their short position and then they got smashed. Okay. So they're thinking like us. They don't believe in this rally. Okay. They don't believe in this rally one bit. They just started covering now because they're getting run over and they're getting a little nervous. Right. So that's why I'm saying to you guys, the example I made to you earlier, we get any little weakness we get, that's not a catastrophe, not a liquidity event, they're likely going to take some of those shorts off. You understand? And add some exposure. Here's another part of that crowd on the professional side. CTAs, right? So they're basically trend followers. Okay, but they're systematic. There's no emotion involved. All right. But as the market finds some stability and as volatility remains towards the lower end of the range, they have to adjust this position like they did here. Right? And that's where you see, if you're a member or you've seen it on Twitter, McElliott from Nomura talk about it a lot. Goldman talk about it a lot, about the CTA buying, the amount of buying that's been coming in and due to come in. Okay? Because they have to adjust their exposure. They can't be as bearish as they were here when VIX was at a high. Again, they're systematic. They're trend followers, right? So markets go to certain levels, volatility trades at certain levels, they adjust their exposure accordingly, right? So again, this is all that lopsided positioning that we could have the argument, but for me is the only reason we've rallied the way we have. Okay. The match got lit, and the catalyst for it, the Fed not rigging the game, is the only legit catalyst that I can see. Like, they're saying that Fed, like Powell was dovish. I mean, maybe a little bit, right? He said they were at neutral, maybe was the most dovish thing he said in the presser, but it wasn't that dovish. It wasn't that dovish. They had an excuse to squeeze and run over this lopsided positioning, and they somehow did it. All right, Sharpies. I'm going to go to that now so you guys can see Sharpies. And then you have Sharpies here that basically just took the other side of the trade from everybody else and their mother who was short. I want to go to the riffraff first to show you guys. Okay, so you see this? This is, we call them the riffraff specs, right? In the futures market. So combine net positioning and index futures from the speculative money out there. And you see how aggressive they got here? Boom, right? Bigger short than they had into the COVID lows. And 9 out of 10 times when you see that happen, Sharpies, the smarter money out there, will take the other side, right? And that's what you see here. They did the opposite. Okay, so now this is Friday's update. Okay, it's a little delayed because it goes Tuesday to Tuesday, but you can see off the chart above, right? We've already rallied. They added short into that rally. That's why this rally had more legs than all of us thought it would. Now there's no way to predict that. We didn't know they were going to add shorts into the rally, right? Usually they cover right away as soon as they get bit. All right, so what's likely to happen is before, even if this is a vicious bear market, which it very well may be, all right, could be the worst market we've ever been a part of. I have no idea. The backdrop certainly calls for it. The likelihood is you're going to see something like that before we roll over and make new lows. Okay. Now, again, it's no guarantee because China can launch a hypersonic missile and hit the Statue of Liberty in the head tomorrow morning. You know what I mean? And this doesn't mean a damn thing, right? But up to this point, from the start of the year, with everything the Fed has done, everything that's gone on, the economy slowing, everything, if it continues just the way it's been going, right, there's nothing broke, no liquidity event per se. In all likelihood, you're going to have a scenario here, and I call it a bullish phase because the reason why I call it a bullish phase, see, two things, okay? And those of you who know me know exactly what I mean when I say this. It's no bullshit, right? This setup here, if we didn't have the Fed rigging the game, we'd be all over this like it was the bottom. All kidding aside, we wouldn't care if it was the bottom or not because the rally off of it, once it starts with positioning this lopsided, okay, it's like nailing any bottom. So you don't care if it's a major low or an intermediate low because positioning is so lopsided. All right. Without the Fed doing what they're doing, tightening and manipulating risk assets into a slowing economy, right? You'd be all over this and you'd add it into weakness because the downside would be limited and your upside would be huge. And on a risk reward basis, you want to take that and lose your money any day. Okay. But because it's not that, and you have the Fed doing what they're doing, we don't know now where this rally ends. Okay. Normally, what you do is if you got long here, you don't touch that long exposure until they shake out all those shorts. You don't touch it. You don't touch that long exposure until hedge funds capitulate, CTAs capitulate, put the calls, roll over. You don't touch it. Okay. The problem this go around with the Fed doing what they're doing, they could come in tomorrow, right, and aggressively start to tighten financial conditions and basically put a cap on the upside like they did here. Right? And as we've seen, it doesn't matter that positioning didn't unwind completely because they're rigging the game. You understand? It's being just like they did on the way up, it's artificially being pushed low, pushed down. So that's the problem we face here. And that's why instead of even a bear market rally, I've been using the lingo more of a bullish phase, right? Where we can look to play off dips and look at it as, you know, these lows should hold and there should be plenty of squeezes in between, even if this is the upside. Even if the Fed says that's it, this thing can't go anymore. Okay, there should be plenty of squeezes in here until that short exposure gets soaked up. So that's the difference, right? And if you guys remember when we were talking, those of you who were around a couple of weeks ago when we were here, right? Remember we were saying like best case scenario, right? Where the Fed would possibly allow this to get to, and you guys were throwing the number out, 4,200, right? And that's like Hartnett's number too, right? From Bova. Anything above, 4,200 or north, you got to be a seller here with the Fed doing what they're doing. Right? And while the bull bear indicator is floored at zero and positioning is still lopsided, you look to buy, these pullbacks, which obviously you wouldn't do if positioning wasn't that way. Okay, and these are normal guys. Even if it's we're still in a bear market, nothing really has to change. You see these rallies, it's rallies like this all the time in bear markets, all the time. Sometimes they happen in a matter of a days. This type of move, a couple of days. That's how strong they are, and then they stop. So like, we were talking about back, again, everybody is comparing it to 2008. You know what I mean? And I hate even looking at it because they never resemble each other. You know what I mean? 2008 was 2008. But in 2008, you had these here. And let me tell you something. And look. Right? And then still the worst part of that bear market wasn't even here. 19, really? I heard the 70s was highly correlated. Now the 60s too. But you know what's crazy? I don't know how can you compare this day and age to the 60s? You know what I mean? Like how? No, I know what you're saying. You're saying the price action. But I'm saying you're talking about night and day between the markets. You know what I mean? They didn't know what the hell a robot was. Now you have robots all over the place. So this market is so much faster. Even from a couple of years ago, this market's so much faster. And I think that's a good thing because these bear markets can run right through us quickly. They used, a lot of times they take forever. That's the problem with these bear markets. So that ultimately could be a good thing. But that's what I think. Again, I have no idea what the future brings, right? And I'm not even talking about events in the future. I don't even know how, positioning is going to look in a month, right? If we're over here and you got the economy deteriorating significantly, okay, and shit's hitting the fan, and that's what we want to see because we need to see it before it's all said and done. If positioning is just as bad as it is now, possibly it doesn't necessarily mean we have to get to new lows. You know what I mean? That's why you can't even put a level or a price on things. We have no idea what the future holds. No idea. But in all likelihood, as we've been talking on these webinars, right, there's still work to do. If you look back through history, there's still a couple chapters left of this story before this book can close. And this is one of them, right? This is one of them. And this is an upside down hockey stick. So this is the fund flows. And you can't really blame them because every time this market looks like it's on the precipice of a disaster, you have a squeeze just in the nick of time to keep them reeled in, But is it a guarantee? No. But in all likelihood, when this is all said and done, this is what's going to follow from the retail sideline money. They're not going to feel this eager to buy equities in a long time when this thing is over. That's how it usually goes. That's how it usually goes. Because once this rolls over, it doesn't come storming back, right? You don't see it here, but once this rolls over, it stays dead. It stays dead for a long time until the final chapter of a bull market. This was the final chapter of a bull market, right? So we're looking for the final chapter of a bear market now. So those are the things that, these are the things I look at that lead me to believe that we still got more work to do as far as a bear market, the bear market concluding is concerned, But in the meantime, you get these bear market rallies and these bullish phases that wear out. Like you think about this, right? Think about the bears out there for a second. Most of us we lean bullish. Think about the bears right now. Like they're pulling their hair out of their head. I mean, I remember here on this Zoom, and if you're on here again, I'm not singling you out. I don't remember who it was and what your name was anyway, so don't feel bad, okay? But like I was arguing with a couple of people on this Zoom who were talking about just get short and stay short here, right? And remember we were having the argument, Drunken Miller is scared to get short, but you don't have no fear of getting short here? Remember the conversation? It was the time when Drunken Miller came out with that interview. Remember where he said, I can't short here. That's the one thing I know. I'm not bullish, but I can't short here. And, I'm on here talking to a couple of traders who are probably trading maybe 2-3 years tops, who are telling me just get short here and stay short, so you think the bulls got it rough? Outside of the early part of this move, the bears, there's no easy money here, my friends. I know it wasn't your Lotus. I mean, again, I'm not making fun of anybody. I'm just saying it proves the point. Don't listen to or pay attention to what you see and hear on social media, right? No one's making easy money. There's no easy money out there. This thing is a pain in the ass, right? We're in a rigged market. The Fed is rigging the market to the downside. And even the bearish trades are harder than the bullish trades. Figure that out. Right? You think we're frustrated? That's frustration. You know, so it's tough. But like, I'll give you an example, right? And you think it gets easier? Drunken Miller, right? Who's one of the best out there, hands down, no matter what anybody says, right? He's looking for something like this to short into, to start building positions on the short side again, right? That's what he mentioned. You know, again, not an easy thing to do, because you know that unless something goes boom, they're not going to make it easy where you just short here, and it's possible, but it usually doesn't work like that. It's just it's a tough one. It's a tough one, right? But again, for especially those on the member side here, right? Well, we want to pay attention to, okay? Because of the things we look at, we have something to pay attention to get a heads up on if the Fed's coming back in doing their thing again. And if they are, we don't want to get in the way of that, right? We want to get the hell out of the way of that. We don't want to play with fire. So if we start to see financial conditions starting to tighten, especially aggressively, and credit spreads starting to blow out again, you know, we don't want to buy dips. We don't want to do shit. You know, we want to wait it out for periods like this again, where it opens up a window to, you know, make a little bit of money, being really tactical, you know, but it will end at some point. It will end. It's probably not going to be too many people around with money when it does, but it will end, and there will be bigger and brighter opportunity. Oh, somebody mentioned that symbol. Like, well, what is that? We don't want to see that. Like, where, you see what I mean? There's speculative money still around. What's that symbol you guys just mentioned that went haywire? What the hell is that? Yeah. H. What is this? Is this for real? What is it? A SPAC? Chinese farm? You got to be kidding me. Oh my God. Yeah. I mean, I never seen to 2000. I never seen that before. What the hell? How'd they do that? What's the float on this? 200 total? 200 shares? This float's got to be crazy small, no? What's the volume on it? Let's see. It trades, what is that, 349,000? Yeah, 349,000. This thing, the float's got to be, honestly, 80,000 shares. It's got to be. Yeah, the float's got to be tiny for it to go to 2,600. You probably can't even buy it. You buy 100 shares, it probably runs $50. 19 million on the float? That's small, but I didn't even think it'd be that big. This is like a 800,000 type float. Jesus Christ. What does it say here? Does it say the float? Yeah, FinViz is usually a good place to look. That's crazy though, man. Damn. But you know, anyway, this is just this was well, this is 2000. I don't remember seeing anything like this. To 2000. That's a lot of points. My Lord. Someone's going to jail. There's something fugazi going on. Yeah, there's not too many they can pump now, so they all went into one, huh? They all went into one. 50 to 2,500. Praveen, I don't remember seeing anything like that. I'm being honest. 2,500. 50 to 200, maybe. 2,500. Yeah. Can you imagine options if they were too small for options? So what else? Yeah, so you guys see here's the Goldman sentiment indicators, and same thing, keeps inching closer and closer. I don't even know how it's doing it with fund flows all the way here still. But it's moving little by little even more to the left. If this came in, you would have this floored to all out bison. Everything else is bouncing around here. You get a lot of things. No, all bullshit aside, with the amount, with positioning and sentiment where it was at, you really could, without the Fed, you could really make the argument of a bottom. You really could. There's a lot of shit there, from Sharpies to bull bear zero. The only thing is fund flows. Look, this, right? We wanted to see money start plowing into the safe assets. You always see that. This could still come more. Like this was COVID. This was late 2019. I can't believe this was up here. Oh, even here, like a month ago. Underwriters number received the so they broke it, so this shit. Jesus, yeah, it's someone gonna go to jail for that thing all the time when you see action like that. But yeah, there were a lot of constructive things. The two things, it was the fund flows and the Fed. Now you got the Fed. You got some conspiracy theories out there that the Fed can't tighten anymore for whatever reason. I don't know how true it is. Have you guys heard those rumors in regards to the Fed? Because here's the truth of the matter, right? Yeah, I mean, but the downtrends, rates going lower, okay, is not really that far-fetched, because you have commodities rolling over, even though inflation's still sticky, but rates going lower also is not a bullish thing. It's telling you the economy is in shambles, or is going to be in shambles. You know what I mean? If not already. So, that, I know it helps stocks and it helps them over a short term. I don't know if that alone is going to have any lasting power as far as a rally is concerned. But financial conditions, and a lot have to do with risk assets lifting, rates rolling over. Financial conditions really loosened up, and the Fed, that's the last thing they want right now. Bad economy, lower rates, higher PE multiples. Yeah, I mean, you got a lot of things. You got a lot of things that the Fed didn't want to see happen here. That you didn't. But how much control do they have? Who knows? The economy. Here's the thing, AC. We haven't even seen what the Fed has done have an impact on the economy yet. You know what I mean? Right. And you're going to get, that's the worst case scenario, right? You get sticky inflation and you get a shitty economy, and that's not a good situation, right? That's the worst case scenario for them. Yep. Because now, right, the Fed can't be easy. You don't get that Fed put and pivot because inflation's sticky, right? And the economy's shitty. So you don't have an accommodating Fed and fundamental stuff. I honestly, Tony, that's the thing. They've stopped. You know what I mean? They've stopped. Like they didn't meet their quota of what they were supposed to do, supposedly. Now, what's the reason for that? Something happened. I don't know. I don't know. I'm being dead straight with you. If I knew, you know what I mean? I would love to share it. I really don't know. You know, there are rumors, right? Again, there's chatter that the Fed saw something that they had to put a halt to what they were doing. The economy couldn't handle what they were planning on doing. That's the rumor out there. That's the rumor out there. That's why off the Fed, the presser, they were, you know, it was taken as so dovish. It wasn't really that dovish, but that was the chatter going in. And then when Powell said, oh yeah, we're at neutral already, you know what I mean? They took it as, okay, he's done. He's done. And that's the chatter out there. I don't believe it. I don't see how they could be done. You know what I mean? But they put a stop to it. They put a stop to it for now. Maybe they need some breathing room. Maybe they wanted things to breathe a little bit. I don't know. But they stopped short of what they were supposed to do. You know, and even now, like, you know, you hear everybody talking about it. It's not hidden. You know, everybody on Bloomberg, CNBC saying the same thing, that, you know, the Fed really couldn't afford, right now that inflation cracked a little bit with commodities at the least, the Fed can't afford to have financial conditions loosen the way they're loosening right now. They got to put a stop to it. Right? They got to keep things tight, because ultimately their goal, they want to stick a fork in inflation, make sure it's dead. They got to make sure it's dead, right? They don't want it to come back and then they got to do it again. They want to kill it. And if the economy catches a beating while they do it, so be it, because they know what to do to prop things up if they need to do it in regards to the economy. But they saw that something happened that put a halt to their plan. You know, and the dollar, the dollar paused too, right? From what I saw, I looked at it today. The dollar hasn't, it's just been hanging out. Yeah. So, you know, if we see financial conditions start to tighten again, you know, you're probably going to see the dollar strengthen up. But again, it depends how aggressive. Let me see. Did I post them here? Hold on. Now the thing is, like, with Sharpies too, you know what I mean? I told you what, like, the one thing with Sharpies that what am I doing? Look at this. I'm talking. I don't know what I'm doing. The one thing with Sharpies that I always get concerned about is that they know something that I don't, you know? Where is financial conditions? Here it doesn't show it as much. Well, you can see it's the light blue. It's over here now. So you can see how aggressive it's been tightening though here, you know? Financial conditions. And it's come in, when you look at it here, it's not that bad. You know, at the least they want to keep it here, if not even tighten. Maybe they think they did too much, too quick. because we didn't even see, guys, we didn't even see the impact they're going to have on the economy. You guys don't realize, we had this conversation last week. All the stuff that we're seeing have an effect on the economy now is all based off inflation, not the Fed raising rates and tightening conditions. All the warnings from Target, Walmart, all these things, they're all from inflation. You understand? The Fed tightening and raising rates, that's a whole different can of worms. That's slowing down the economy. All right? That's deflationary. We haven't even seen it have an impact on the economy yet. You'll see. You'll see. We're going to see it. Same thing when the Fed's cutting rates and implementing QE, you don't see it right away. You know, the market sometimes will react quicker, but the normal economy, you don't see it till, yeah, we're housing because of rates, the mortgage rates, right? But even didn't they bounce? Even they bounced recently, AC. But we haven't seen, housing has cooled off dramatically, but you know, it could fall off a cliff. You know what I mean? It hasn't hit the fan there yet. But I think the Fed got spooked. I really do. I think the Fed got spooked that they've been really aggressive here. You got to understand, I told you guys this many times. If you told me all this, they were going to do all this, if you told me this last year, I would have laughed in your face. I'm the first one to admit it. I would have said, yeah, right. The Fed, our Fed, Powell is going to aggressively tighten and raise rates into a slowing economy. Get the fuck out of here. What are you, drunk? That's what I would, honestly, that would have been my impression. I never thought, I don't care inflation or anything, I never thought for a second they would do. Yeah. I would definitely would have flipped by now. Definitely would have flipped by now, I would have thought. No doubt about it. You know, I told you guys, I swallowed the pill. What do you guys call it? The red pill or whatever. I swallowed it right here. Right here. That's when it sunk in like, oh shit, the Fed's going to do this. You know what I mean? The Fed's going to do this. That's where I had to swallow it in the mid. You know, even though, again, my bias, I thought the Fed would never be able to pull it off. Yeah. And Moses, the thing is this too, okay? We're going to see the effects like you're saying, and it doesn't mean that the price action in the market has to be as ugly. You understand? You could bottom into that when you start seeing the effects, you know? So like now we're not seeing the effects, and it's really hard for me to believe that we've bottomed. You know, but again, one thing you'll realize about me, I've been in this game long enough, just like at this point here, okay? If I'm seeing proof of something completely different, I'm not going to be stubborn. You know what I mean? Like if we start seeing legit proof that this was a bottom, and we start to see the constructive things that we want to see, that, you know what I mean? I'm not going to say, oh, this is not the bottom, and hold out and watch a whole new bull market occur. But you know, we'll see it. It takes time, and we'll see it, right? Let's see. I'm dying to see how Sharpies, you know, how this plays out with Sharpies too, and Murfrath. You know what I mean? How long they stay all in like they are. You know, do they trim a position. Like even if Sharpies trim, like let's say Sharpies trim their position this week, that's not even a big deal. What I'm looking for is if we come in a little bit, which is certainly likely and possible, you know what I mean? Do Sharpies slap it back on? Like that's the bullish sign. You know what I mean? They come right back in and buy that dip. But we could definitely we're definitely going to come back into this vicinity here, and this is going to be an interesting point. Oh, Europe is. What are you talking about? Mess? You think we have a mess, Ed? Europe is a disaster. That I feel bad for them. I feel bad for them over there. I feel bad for them. There are a lot of balls in the air right now in this world, right? Between China, Europe, us, Russia, Ukraine. Yeah, you got a lot of things that could go haywire. We're all part of the same mess. You're 100% right. You're 100% right. Yeah, you see Canada got really aggressive and hiked. Yeah, it's new to they never had to deal with this, right? Yep. Exactly. Exactly. That's why, as far as predicting any of this, it's impossible. How do you predict it? No, how do you predict how things are going to shake out? You know what I mean? It's impossible. It's impossible. That's why you're better off you remain tactical here, keep your eyes open, you know what I mean? And when you start to see when you have your eyes open, you start to see things, some constructive signs, just be aware of them. Be aware of them. It's certainly a possibility, a range bound market, but how wide of a range, that's the whole other question. A whole other question. But, there's a lot of people who, not a lot of people, but a lot of, reputable people who think this like 4,200 top, right, and lows hold is a range we're going to trade for a bit until positioning shakes out. And the longer it doesn't shake out, the longer this choppy range can go. And that's another thing based on history. You don't get that capitulation from fund flow, right? This is something we spoke about. You guys remember. Without that capitulation from fund flow, you don't get that V-shaped recovery. You don't get it until they spit up. And it makes sense. It makes sense. So Bays, this goes into your choppy range bound at best philosophy or thesis as well. I don't have too much faith in that. Right? But you need this. I got to read it 2 more times, MGR, and then I'll get back to you. I didn't get a chance to read it today. I'm being honest with you. I read once through it, and I got to read it at least 2 more times. Yeah, well, basically, here's the thing. The one thing I can promise you in regards to flow, okay? And we're not seeing it now. We haven't seen it, and that's why it seems so foreign, okay? The one good thing, if we do have some chop and the lows hold, okay, we're going to start to see names outperform. You're gonna find alpha in names, and what you're gonna see new names catch fresh action, right? We haven't seen it up to this point, and we're in earnings season right now, so we haven't had a shot to see it. But if we go into some range bound market, what you're going to see, especially into weakness, you're going to see them start to build positions in new names. And that's where believe it or not, as a stock picker, again, I'm not going to use the word easy because nothing's easy in this climate, but it makes it a lot easier than what we've been going through. Because you can find opportunities in names. Now everything's been so highly correlated since the commodity names rolled over. Everything moves up and down with the market. So you have no edge off flow for stock picking purposes. You know what I mean? You might as well just buy the index or leverage the ETFs or whatever you got to do. But that doesn't last forever. The longer in the tooth this process goes, the closer we're going to get to where we can find alpha in individual names. And I'm telling you, from my experience, it's new names. It's going to be new names. Again, not names you never heard of, but names that haven't caught action in a long, long time. Yeah, well, all the sectors are scorched now, Tony, because everything moved together. You know what I mean? In this rally, the only sectors that aren't cooked are the defensive sectors, because they've sold off a little bit as risk on rallied. But we should start to see divergence in the groups sooner than later. Like you'll see biotech act better, healthcare act better, or maybe the financials a period of time are acting better, but that's what you usually see. But even more so, I'm telling you, you're going to feel like a stock picker again. And if you can take advantage of that, if it's something you can, if it's something you play, trust me, it's like it's a godsend in this kind of environment. Oh yeah, flow's definitely been a gazillion times better in this rally. And it's not just a rally, because we've had rallies where the flow has sucked, but you're seeing some real orders out there. Again, the problem, you have earnings in the way. That's the problem. So we'll see as we get through this week. We'll get the true colors. Yeah, exactly. The March, it was all, you remember what they were buying? The CLOV, all the skills, all that garbage. Open, GameStop, AMC, they tattooed AMC, remember? AMC was like the best name, flow-wise. Yep, all the garbage. So he makes a good point. The quality of the names and all has definitely been better in this move. But the true test is going to be, again, you got to understand too, when you get into these type of environments, when you get a rally, okay, like not only are we seeing earnings buying, we're seeing forced buying. You understand? People who are short need to hedge. People who don't have exposure, funds that don't have exposure, need to add exposure. So they're chasing not because they want to chase, but they have to chase. You understand? It's forced buying. The real flow, right? The goods when you see the weakness and you're seeing a fund start to leg into the weakness, right? Because that's when they really have conviction. Right? It's not forced buying. So we're going to see the true colors out of this action in coming weeks. We haven't seen it here. We're going to see when we get a little breather, and as we get through this week of earnings, the 2 big weeks of earnings, we're going to start to see the real action, if there is any real action. Again, could be, we may not see anything. We may see put sweepers like we saw here. Who knows? But if there's buying, it's going to be real buying that shows up. That's for sure. And even like if Bezos, his range bound, where he's got conviction that we're going to be in some sort of range for a while. The same thing. What you're going to see is you're going to see quality buying show up near the bottom of the ranges. And the good thing about that is, those are the best entry points too. So you're seeing quality flow at a decent entry. And then as things get, to the top of the range, that's where you want to be a seller anyway. Yeah, see, and that's the thing, because anybody who's been a member of the steam room will tell you, when we see hedge funds short, we lick our chops, because exactly what you just said, because of how they're accustomed to chasing. They need to for performances, right? Like you're saying. So you don't budge. You put on long exposure, you don't look to take that off until hedge funds capitulate and flip long. The problem this go around is the Fed. That's the problem. You understand? If the Fed has to do their thing, and like AC says, they're selling calls and capping upside, you understand? You can't rely on just positioning anymore. That's the problem here. Otherwise, I'm telling you, this setup, right? Yeah, they can stay short. Like, listen, in 2008, you don't think the hedge funds were short? They were short. They got run over certain periods of time, but when shit hit the fan, they were short. But they were short equities and they were right, but they were getting blown up and everything else. Everything was collapsing. So, you can't apply that stuff that usually works when you got greater forces at play. We got greater forces at play. The Fed manipulating the market lower is a greater force at play. Like, if you should have heard the interview with Dudley, the former Fed governor, whatever the hell he was, on Bloomberg. He basically flat out, without like saying it, he said, above, you can't buy here. You can't buy here. The Fed's going to do whatever it can to not let this go any further. You know what I mean? The odds are stacked up against you. Now, can they lose control? That's a whole other story. No, Dudley, not Kramer. Dudley, he works for like Bloomberg now. So he's got great insight to the Fed. He writes, I think, an opinion piece for Bloomberg. But, he really knows, obviously he knows what he talks about. He knows what he's talking about, No, Kramer. But yeah, so Dudley was saying that because they flat out asked him, like, can the Fed, like, this is going against what the Fed needs to happen. And the Fed, like, he was making out to be like, any higher than here, the Fed's got to get really aggressive, really aggressive. Yeah. Farrow, that's the guy. Exactly. He's awesome. I watch him all the time. He's awesome. I love that morning show. He's got great guests, Farrow. He's cool. I like him, especially compared to the other jabronis. Yeah. Lisa knows her shit. Definitely. Yeah, so that's the predicament we're in, guys. Otherwise, like, all kidding aside, I tell you, this, like, think about what was here. Those of you guys who've known me for a while, think about like what went into this low, what you had here, right? Like we were saying, bull bear zero, Sharpies all in, everything you could possibly imagine went into this low. Hedge fund short, and I'm being dead straight with you. Even this rally here, this wasn't a given. We're talking about the conspiracy theories out there of how the Fed stepped aside. We didn't. Who thought the Fed was going to step aside here? Now easier said than done after the move. You know what I mean? If you would have told me credit spreads would have remained this calm, you kidding me? You buy up that low, no? Right? right here. They topped out, right? And if you would have said they remain in check all this time like this in a little downtrend, could have bought every dip here. So now here, okay? Easier said than done, right? You always look back, it's easy. We're here now, okay? What's going to go on here? Talk to me. Talk to me. What goes on here now? What's your gut say? Is it this? And we go right back into this now? Right? Or even this? And bust out? Where's MGR? MGR knows. Like, what's going to go on? Or does this continue for how much longer? Right? Because if this stays in check, then you buy dips. So you think it sticks in this range for a little bit longer? Yeah, Kalanovich he's a smart dude too, Kalanovich. But, it's the market. I mean, everybody is wrong from time to time. He knows better, though, to stay bullish rather than bearish for longer. But MGR, if you think this stays in this vicinity, right, then you buy dips. You buy dips. And you know when you're wrong, right? Because if it busts out, you pull the plug. Pretty simple. But you got to buy dips. You can't chase. You got to buy dips, just like here. You got to see here. Look, like if you thought here that this thing was going to stay range bound, you buy dips. You buy dips. See, like let's say you thought that here, right? Where are you wrong? When it went to new highs, that's it. Game over. Yeah, Ed, that's in the past. NPD is still elevated. It's stuck. That's why I haven't even talked about it. Ed, you're 100% right. Usually when the Fed pivots, I think it's like plus 1 MGR, a little bit lower than where it was. I'll post it in the morning tomorrow. Usually when the Fed pivots, Ed, after a correction, a bear market, what you usually see is this rolls over, right? When the Fed rigs the game the other way, right? Less probability of default. And this rolls over and you buy every dip. Buy the dip. BTFD. Right? During QE and all that. That's the play. So that's not supposed to happen. Okay. If we see it happen, then that's what I'm talking about, like constructive signs we can't ignore. You start to see this thing roll over, it's telling you, whether the Fed is telling us or not, they're done. And they're getting ready to cut. Yeah. And then Sharpies had something up their sleeve. They weren't just playing for a squeeze. And we'll find out even before that, Praveen, if we're lucky, whether it was just a squeeze this go around or not, of how they react in coming weeks. You know what I mean? Yeah, I mean the Fed, nothing's gone through the windshield yet. What do you mean, HC? As far as rolling over and pushing higher? So you're saying if they really widen out is what you're talking about? If refinancing rates Yeah. They always do. Yep. I mean, we're definitely gonna see. I mean, you know what's crazy too? You see these like the confidence these sentiment readings out of some of these small business surveys. Oh my God. You think the end of the world, some of these surveys. Yep, you're exactly right. That's usually how it goes. That's usually how it goes. So yeah, like this is one of the most important things out there to like this was the biggest tell, for this rally being, legit sustained here. Because normally this thing would have turned around already because the Fed wouldn't have it. So we'll see. I mean, rates, it's gonna be really interesting with rates. I don't know. I mean, these rates are crazy, because right now they plummeted thinking we're going into a menagerie. I think Bova, what was it? They came out yesterday and said rates are heading lower. I can't, let me tell you, they gave up a lot for Soto. I know Soto's good, but I love Abrams. I think Abrams is going to be a good player. I really do. And they gave up that other kid, top prospect. So they gave up a lot, San Diego, but you get Soto. So, and Gore, right? I can't believe they gave him up. They gave up a lot. They gave up a lot. They gave up on Abrams so already. Like they didn't even give that kid a legit chance yet. He reminds me like a Ricky Henderson type. He's going to be. He's one of those kids you could see. Yeah, he will, Max. He's a kid. He's a kid. Like Byron Buxton. Right? I mean, he gets hurt all the time, but you see him now? Same thing. Came up scrawny, speed, but you could see the hands was so quick, the bat speed that, the power was going to come. And now the guy's a monster when he's healthy. Did they really? Jesus Christ. Well, at least you get the nice weather. So, yeah, I like Abrams. I'm surprised. Oh, I'm not surprised. In the Soto deal, they were going to give him up. I can't believe they had to give up everything else that they did with Abrams. That was a little crazy, but good for Washington getting enough for Soto. I mean, Soto's legit. I thought the Metsies were going to get Soto. I'm a Yankee fan, so I'm happy they didn't. Yeah, and Josh Bell too. But I mean, hey, Josh Bell's all right. Josh Bell's all right. He's got some pop. He's got some pop. Where did he went to? He went in that Oakland deal? No. The Yankees got Montas, right, from Oakland. Who'd Gallo go? I didn't even see yet. Where'd Gallo go? Gallo went to LA for who? Who'd they get for Gallo? I mean, he had a bad year. He's having a bad year this year, Gallo. Yeah. Minor league pitcher. They didn't have room for him. They got Benintendi now. They had no room for him. I mean, Gallo's never going to hit for average, but even his power numbers were off this year too. He's just having a bad year, but he's got crazy power. Anyway, anybody have anything else that they wanted to see that I haven't showed here? What are we? Hedge funds. I mean, this is the most important stuff. This is the most important stuff. So kind of like what me and MGR were just talking about, that's sort of what we're looking for here, right? We want to see if we can buy and play off these dips. That's what we want to see. Right? So if we see some weakness and we see this in check, right? We don't see this getting too crazy here. we want to look to play off those pulls, whatever they are, 2-day pulls. But where we want to get out of the way is if we see the Fed getting to work again, tightening financial conditions. Yeah. Right. As of right now, you want to stick mostly to intraday here, especially with the indices, because this is tough. Even if we go a little bit higher from here, we're probably going to get some sort of digestion breather before we do, so until we get a rinse of some sort, a little breather, we want to stick to intraday. And then, if you want to get a little frisky, swing trade, especially if we see flow, that's the key. But if you see flow, you want to see buying into like these pulls, and as long as this remains in check, as long as if we listen, when the Fed is not rigging the game, all the other stuff we normally have confidence to do and use is back in play. That's the problem with the Fed rigging the game. The other stuff that we like to use regularly doesn't work. You understand? Because the Fed is the greater force. So that's the difference, right? The Fed's MIA, then, we can use bullish anti-VIX signal to get long or something, or tactical sentiment, get long or something. But if the Fed is doing their thing, we gotta exit. On the flow SE, August 86, do you buy stock or some calls? SE has earnings. What are you saying? Are you asking if you should buy stock? I wouldn't buy stock into earnings. No way. You could get destroyed there. I would buy, if you're going to play anything into earnings, I would, risk whatever you're willing to risk in calls and zeros your stop loss. I wouldn't, a stock like that, I wouldn't buy for a trade ahead of earnings. That thing could, you don't know what the hell could happen to this thing. My God, what a crash. Things. See, if you didn't have earnings here, or you could play a run-up if you're interested. You understand? You could play a run-up into earnings, see what you can get. But if you didn't have earnings in the way, you can make an argument here that this thing could squeeze by accident. Yeah, run-up. But, you got to get out of earnings no matter what. No matter what. Tesla caught a couple sweeps. Throughout this rally. Some decent sweeps too. Yeah, this is another one. I mean, I guess it could go higher. Could go a little higher. All these names now, you want to wait for some sort of little yank and then reevaluate. You know what I mean? Like now you got some extension here. Again, risk reward wise here is tough. Depending on what you're looking for. But what I think, like a name like Tesla, what you want to see is you want to see a little breather. And then if you like it, that would be the spot, even for a trade, especially if we go into a little range bound market based on positioning, you'll see dips you'll find some buyers there. You want to be careful chasing. DKNG, it's earnings flow. Or a lot of these things are starting to see earnings flow now. When is this? This is coming up, isn't it? Earnings? August 5th. August 5th, Friday. So yeah, these things, either like Praveen saying, you want to play either for a squeeze ahead of it, earnings, or you get earnings weakness, post earnings weakness, and then look for a bounce there. But a lot of these things, they still could be absolute dog shit. And these things were due for a bounce. Hockey stick, what are you telling me? I mean, look at this thing. So what usually happens in these things, all right? You get that, like we're saying, that hockey stick bottom. Now, look at the range though, right? You got what here? $9. I mean, it could go as high as like 25, $30, and that could be the range, and that's a big move. So when they get to the bottom of the range, if you don't have earnings in the way, yeah, you might like the opportunity if it catches some action. But it's going to find sellers off any rally almost always, these things. My Lord, what a beating this thing. You know how many bulls are in this thing? And I'm talking about up here. You know how many bulls? You know how many people I just run into who are telling me, oh, I'm just buying DraftKings. I'm just going to leave it alone. I paid $60. I don't care what it does. I'm just going to tuck it away. Oh, my Lord. Yeah. The wheat stocks are a perfect example. Good call. Right? Like, look at Tilray. Some of you probably don't even remember Tilray up at the stratosphere. Look at this. Look at this. It was one of the best SPACs, HC, right? Legit SPAC. MSTO was not selling any Bitcoin today. Even Bitcoin got a little rally, right? Yeah, well, what's that? That's a rally. Yeah. And Bitcoin's been through it. Like, you see, this is kind of, where's the 9,000? Oh, it's even before that. Like back here, you had a lot of just dead action, right? Like, look at this sideways action and then pukage. It's just time. It takes a lot of time. It takes a lot of time. But listen, there are possible trades at the right spot in all these things, but the spots are important. You can't, it's really difficult to chase rallies in these things because sellers show up, constantly. That's why I'm telling you guys, like, when things improve, like if I'm going to buy any of these things, the new names that nobody's in, those are the smoothest rides. Jesus Christ. My God. Space. That's another one. I haven't looked at that one in ages. This was one of my favorite stocks in the boom. Every time it caught flow, I made money in this thing. Now look at it. Wow. These already look like hockey sticks, no? Damn. See? And this becomes a range, basically, right? Soon this is not going to be in the picture anymore. And you're going to see one big range, 5 to 12. Unbelievable. No, Praveen, no new names, man. No new names. Trust me, you'll hear the excitement in my voice when new names start to perk up. But yeah, where the markets, it's highly correlated now. You know what I mean? Everything, like when we're seeing action in new names, what's going to happen is we're going to pay attention to the indexes less. You understand? It's not going to matter that the S&P 500 is down on the day because names can outperform and be higher. You understand? You don't need the market to be up for the name you're in to be up. That's not how the market works. It works like that either when you're in blow off phases on the upside or you're in corrections or bear markets. You understand? So even if you're getting chop out of the indices, you could have a name that looks totally different. And they outperform, and they do that a lot. You'll notice that, oh shit, what you'll start to say, this is, mark my words, you're gonna say, wow, the stocks I'm in do better when the market's down. That's what you're gonna start to realize. Yeah, honestly, you could see it starting up a little bit. I don't know if it's earnings season, but you're seeing some pockets already that, you know what I'm trying to have different setups than the overall market. Like you saw it in solar, right? Recently, you're starting to see a little bit of it. So hopefully that continues, and we see some flow. This is a good stock too. It's a good company, right? Alternative energy utility, right? You get a little bit of both. This is just a good looking name. This NCR, somebody just mentioned, this thing caught a huge call spread. This is there's takeout chatter here. Yeah. Monster call spread. Something to keep an eye on. They're fintech, right, Praveen? I think it's fintech, this name. Yeah, something like that. I remember payment company, I think. But something might be cooking here. I definitely keep an eye on the flow in this name. Something might be cooking here. Yep. That's what I like too. They buy it into weakness, Matt. Oh, they make ATMs? I thought it was like PayPal-ish. But you could be right, because this thing's been around a while. Yeah, they've been around a long time. You can definitely see some activists or something going on here, right? Because this is legit. This is no, they're profitable. This is a legit company. Legit company. Previously known, National Cash Register. I remember them. So this was, right, NCR. Software consulting technology company providing. So they changed the business a little bit. Yeah, they pivoted. Yeah, caught action early in the year, and then there was some chatter a little bit after it. That's how I remember there was chatter in the name. But I guess it didn't materialize into anything. Right, but that's what I'm saying. Maybe what's been going on there? I think the deal fell through completely. Oh no, they got bought out, right? It was a take under or something. So I would definitely keep my eye on the action in NCR if you're interested in the name. Something might be cooking. There were some big call spreads too. You like if we see risk reversals come in, then you know something's going on. Then you definitely know something's going on. So that's what I mean. We might be able to put our stock pickers hats on before you know it here, guys. Before you know it. So don't lose hope. DOCN. No, I remember seeing action in this name back in the day, but I haven't seen anything recently. Digital Ocean. Put it in a little floor there, huh? What do they do? I know this stock from somewhere. They got earnings coming up here. Cloud servers? Oh, yeah. Software. I remember this running with the software name. That's why I remember it. How are the software studs doing? Have they been holding up? MDB, Bill? Yeah, they're trying to bottom. You see, like a lot of these names, they're not at the worst. They're not at the worst spots, these things, they're at decent spots. Net. That was one of my favorite stocks, HC, because I didn't even know you yet. Net was my baby. when it first started catching flow, nobody even knew who the hell they were. All the way back here, HC. Yep, Net and SE. All the way back here. Nobody even knew who the hell they were. This thing was a beast. D-Dog's a great name too, right? Let me see D-Dog. D-Dog's had some flow. They report Friday, right? Thursday, Friday. Yeah, look. Goldman loves D-Dog, by the way. AMD's on you. You want it to stay red if you want to play it tomorrow. Down 5. You might get a chance to buy it. Twilio, Wednesday earnings this week. No? This was another beast back in the day. Look what they did to this stock. Jesus Christ. This was a beast. Yeah. They have earnings this week. I looked at it because it caught flow. They're losing money, Twilio now. They were profitable, weren't they? Or maybe not. I don't know. Look what they did to my boy. Yeah, but see, like, right? This is not a, I mean, this thing didn't rally with the market. It's not stretched. So maybe they rotate into these suckers next if we hold up. That's what I'm saying. We need the Fed. If the Fed's not going to make some noise, maybe they give us a little window to play some of these things. We'll see. But yeah, listen, AMD tomorrow, you got some weakness. You see some call buying come in. You like it, we're for even just a bounce. You play for a bounce. You know? So there's some opportunities out there. Look for opportunities. I don't know. You know, Twilio used to be a huge mover. Now this thing's been sterile. 12 points. Look at this thing. I can't believe how dead it is. Wow. Oldie but goodie. We're going to find the new Twilios. That's what we're going to find. All right, guys. I'm out of here. Thanks for stopping by. As always, love the chit chat. All right, but we got some stuff to keep an eye on the next few days, next few weeks. See how things shake out here. I'll leave the Roku chart on there for you, all you Kathy fans. Have a good night, everybody. I'll see the majority of you mañana.